Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information. Drew Meredith, welcome to this very special episode for the Australian Investors Podcast.
I'm incredibly excited to be here.
We've been building this up for months. You've got your special shirt on there.
It's post-Christmas now, so not necessarily my Christmas shirt, but my New Year's shirt.
For anyone that's listening, it is forest green with white stripes.
Yep, still searching for that country road ambassadorship.
Yeah, if anyone wants to write in and help Drew out, road and gun, country road, he's up for grabs. Even July luggage. I think we've got some people that work for July listening to the show. So write in. Or send your merchandise care of Drew at Wattle Partners. Other than that, not an ad. We are talking about investing, and we are creating some portfolios. And over the last few months, we've called for your support in doing so. There are 3 portfolios.
Can't say the support was overly helpful at different points.
Well, it was helpful for them.
Some of the ideas, maybe.
Yeah, I mean, it sounds like Drew's already getting into the heckling. But basically, the rules of the game are as follows. Number 1, we only have a maximum of 10 positions in the portfolio. We had to allocate $10,000, and we are short-term investors on this podcast. Just kidding. We are long-term, but we are only taking a 1-year view with these portfolios, which, as you will know, is not long-term.
So it couldn't just be FANG?
You could just put it all in one if you wanted to, Drew. We'll be revealing your portfolio in just a second. Probably the other really important note about this is that nothing that we say here should be taken as being indicative of what you should do with your money. If you haven't already tuned into many of the episodes that we run on a Saturday morning, you probably don't know that a lot of what we talk about on the show is a bit of fun. And so these portfolios are not our real portfolios. They're not our actual portfolios. They're not something that we are actively trading on. If we have any position in any of the things that we mentioned today, we will disclose that.
Of course, yes.
But do not take it for a moment to think that these are actual portfolios that we are running.
I see this very much as a satellite portfolio, and my entire core is already set up. So 90%, this isn't theoretically, this is the way I think about constructing it. 90% of my portfolio is in my core. It's highly diversified. It's ready to go. And this is the fun barbecue, fake money portfolio of I'm thinking of it as like best ideas or best short-term ideas.
So we will refer to these throughout the year, and you can play along at home. We will set up the portfolios in Navexa, which is a tracking tool that you can use to track your portfolio for performance and for tax reasons, and it gives you a tax statement at the end of the year. The good thing about Navexa is you can put in things like managed funds, ASX shares, global shares, crypto, that sort of stuff. And it all just goes in. And at the end of the year, you can spit out a report. The software is pretty reasonably priced. It's about $20 a month. I actually don't know. Navar's from Navexa is probably like, that's not how much it costs, but I'm just assuming. So sorry about that, Navar. There's no affiliate /referral /thing going on here. It's literally just that we use this, and Navar's hooked it up so we can track the portfolios on the Rask websites. So you can see the portfolios in real time. And the other thing that we should note is that if we make a bad call here on the show, let us know.
I certainly will. I get reminded every week.
If we,
PGM,
what's the
ZIP?
Zip was a good one,
MFG. The list goes on. So that's why I have to talk about FANG so much.
Take the one. Well, one winner outweighs all the losers.
It is good because concentration risk can offset the losers sometimes.
Well, that's it. Yeah.
Not in a responsible core portfolio, though.
Not in a responsible portfolio. We'll get Jamie back on the show to lend some responsibility to the show and credibility. But so we will just jump into it. There are 3 portfolios: one from the tribe, one from me, and one from Drew. Maybe we'll go through the community's portfolio first, seeing that was built in combination with some experts that we dialed in. For example, we got an almighty tip from Kev at Atchison
Kev
Consultants.
Toohey.
He's a very highly experienced analytical fellow.
Unassuming man.
Unassuming. You could walk past him in the street, you wouldn't even know he's into stocks. But then you get him talking and he just goes. And so we've had a tip from him, not a recommendation I might add, and from a few others. Like including the team at Global X, sponsor of the show. A lot of the community have written in, and there's a very particular flavor to this, Drew. There's a lot of kind of, how do I put this, small cap orientation, even amongst the funds.
There always is. It's like remember the old $10,000, $100,000 fake portfolio was that in the Herald Sun or The Age?
Yes.
And the winner was always the most random, small micro cap that just accidentally went on fire the week before the end of the year. And it just kept turning over that way.
They actually did something on that show. I don't know if on that game where they did, I think it was like the devil. They had like the sickle and it was the inverse of the portfolio. Yeah. And sometimes that nearly won. So like the opposite of what everyone says.
It's like throwing a dartboard trying to invest over 12 months. Like there's no consistency, and then very few have the ability to do that year on year without a significant amount of luck.
This is true.
Are we going to measure risk-adjusted returns?
Nah.
Speaking of Kev Toohey,
what does that mean?
Well, what's the experience of each portfolio over maybe that would be a good one to bring Kevin the end of next year, and we can grill him on whether his tip worked or not. But explaining the idea and why risk-adjusted returns might be worth considering. If mine's significantly less volatile than yours, but returns say 1 or 2% less, am I going to be punished for that, or?
Yeah, well, we'll see, because it just depends who wins, I guess.
It depends.
Yeah.
Yeah.
So 2 things when you build a portfolio, as Drew said, you can use a core and satellite approach, but you should be diversified across all asset classes. In your accumulation phase, when you're growing your wealth, you want to have this long-term mix between growth and defensive assets, and you want to balance that for short-term risk. And you do that by having that diversification. On the flip side, when you're in retirement, you build a portfolio to your objectives. So like you have some growth and you have some defensive, but then you balance it with income. And so you would have, for example, a need for that income from super or from shares, and you mix and match your investments that way. Now, we will get into the community portfolio. Drew, I'll read it off, and I'll give you a sense of what everyone kind of picked it for, I guess.
Is there a last minute change?
Yeah, there was a last minute change, because I just realized that I didn't input the first one, which is from SLT, who actively fights with Tim, Milkman, Derek, and Scooter in the Rask community for the top position. So in the community,
he's not fighting with them.
No, not physically. SLT
most active.
Yeah. So we have a leaderboard in the Rask community, and you can go in and people get automatically scored for interaction and that sort of stuff. And you can go to the leaderboard, and I think Milkman's currently winning, but then there's SLT and a bunch of others that are in there duking it out for the best posts and those types of things. So the prize here goes to SLT. She's put in QRI, which is the Qualitas Real Estate Investment Trust. And so what the Qualitas fund does, QRI is the ASX ticker symbol. It invests in real estate debt. So it provides income to investors monthly.
Have you interviewed
Andrew Schwartz?
Andrew Schwartz, yeah.
Yeah, so I dare say, if this works out, SLT, I'll take credit for that. No worries. No, just kidding. Qualitas Real Estate Income Fund. The interesting thing about SLT's pick here is this thing doesn't really grow.
No. Is he just betting that the market's going to tank and the income's going to be enough?
Yeah, well, maybe. It's got a yield of 8.4%.
But it's not a bad play.
If markets flat line or go down, then SLT, she's in the money. So $500 from SLT goes into that, Drew. Now we've got Milo, who come through with an interesting one. And
I like this one. I considered this one too.
CBA, Commonwealth Bank.
The Commonwealth Bank.
Yeah.
But I thought it was a sell.
What do you mean?
Everyone's calling to sell it.
Really?
Yeah.
No. Milo's bucked the trend. Says the experts say US small caps are kicking off and all this other stuff, but said CBA. So also, on the one hand, if we wanted to go for a wildly speculative pick, said EBTC, which is an ETF that invests in Bitcoin. Although with the recommendation from the next president of the US, does it count as speculative anymore? Question marks from Milo. $500 goes into the Dizzy Rascals portfolio from Milo. So Kev Tui come out swinging, also bragging in an email to us, by the way, I might add, Kev.
Told us about the purchase price.
Told us about his purchase price. He did actually come on the Rask Network quite a few years ago and mentioned this company, KKR, which is a private equity company, globally listed, KKR. I'm just going to bring up the stock price.
Like Colonial First State in Australia, they own.
Oh, do they? Yeah. Wow. At the time of recording, which is slightly before this goes to air, $126 billion US market cap. Kev is thinking this is a growth stock with the dividend yield of 0.5%. I don't know, I'm putting the words in his mouth, to be honest. But because of Kev's, esteem, $1,500 goes to KKR. Mader Group comes in next, Drew, with $500 allocated from...
Never heard of that.
Portfolio Liolo.
Is this an energy company?
Not quite. So it does... there is a bit of a spiel here. 2025 People's Portfolio Suggestions says Portfolio Liolo. Strong growth. If mining and construction picks up with China's long-term view, more labor required. Diversified into America and Canada now too. Mader Group is a business that supplies labor and services to the mining industry and increasingly other types of industries, and really impressive business. Apparently a very good culture. Never worked there myself. For an absolute out-of-the-box pick comes Money Man with $500 being allocated into Vulcan.
This was all over the news like 3 or 4 years ago. And then just this week, they just announced, I think, a commitment for $1.2 billion of loans. I think, was this like geothermal energy innovation in Germany?
Yes, exactly. Money Man says, for the People's Portfolio, I don't know where they come up with that, but for the People's Portfolio, my pick is Vulcan. Vulcan Energy's share price has seen significant volatility recently, partly due to the progress on its zero-carbon lithium project, that may be the one, shaping its plans for sustainable lithium production in Europe. I think it's I can't remember the basin in Germany where it's all found.
This was a favourite of the Dome as well.
Yeah, the Dome, Luke Larrative. I think, yes, it was, wasn't it? Yeah, he came on and talked about it. Let's not bring that up. Anyway.
Shout out to Luke.
Shout out. The company has also secured key grants and funding support, as you say, including a significant loan from the Australian government. Not financial advice, says Moneyman. We don't even know who you are, Moneyman, with that name. So unless there is a person by the name of Moneyman. So that 500 clams of these fake clams, we'll call them Nevexa dollars, is going into that, Drew. What's next on the list now? I've lost my tab. Oh, here we go.
Oh, someone's making a play on AI. A pretty heavy one. And this weighting is significant too.
Yeah. So
large weighting.
Salty Hair and Peter in the Rask Community.
Oh,
there were two. So,
and they got almost as much as Kev Tui.
They got more than Kev Tui because 2 is better than 1.
2 is better than 1.
Thanks, Kev Tui. ASML is the company, which I don't know what it stands for, but it does something to do with AI, and people seem to like that.
Amsterdam's something semiconductor. It's based in the Netherlands. So.
No, so ASML creates the lithography machines, which are kind of like the size of a bus, and they shine the light through this little prism and then put the chip, basically sketch the chips onto the microchip, and that goes into things used by NVIDIA, by the cloud computing companies, by semiconductor companies. It's a very, very rare business because in a globally relevant industry, which is like GPUs, CPUs, that sort of stuff, it is the only company in the world that does this one thing. So it is a highly valuable company. That's probably why Salty Hair and Peter both picked it.
Turns out the name is much more straightforward than I thought.
Go for it.
Advanced Semiconductor Materials Lithography. It literally says what it does. But it is listed in Amsterdam, so it wasn't that far off.
Mate, you've got it in one. There was a bit of Confucius here in the community because Peter picked all these different things. And then my portfolio would ride along big trends of tech, AI, quantum computing, and the aging population. I said, it's all about conviction, Peter. And he said, you can have ASML. And then there was another one with ASML. Let me bring this up. Who else said it? Oh, it's from Salty Hair. Instead of picking an ETF, I would like to pick the top 10 holdings of an ETF, e.g. ASML. And I said, go heavy or go home. And they said, salty hair, ASML. So that goes in. Derek comes in swinging with Washington H. Pattinson at 1,500 fake Navexa dollars. Derek, long-time listener of the show and friend of the fam. Sol Pattinson, ASX-listed SOL, had Todd Barlow on the show last year. He featured in our year in review at the very end. Washington H. Pattinson is a diversified company. We got to this in the community because Derek was saying something or other about having licks and long-term wealth from these types of businesses. Your mention of licks made me think of Peter Thornhill's lick portfolio as something different to what you normally cover. Now that MLT, which is Milton, doesn't exist anymore, it was acquired by Solpats after that. So maybe you could replace MLT with Solpats. The combination of licks is very Australian market heavy. So maybe you would add something from the US. And so we've taken that as Solpats, 1,500. Now, this is where things start to get a bit spicy, Drew. QSML, do you know what that is?
This is the quality small cap ETF.
Yes. QSML, ASML.
Global smalls?
Yes.
Global smalls with a quality filter. So
yes.
It's backward-looking, return on equity, free cash flow focused.
So this comes from James in the community and gave us a bunch of different stuff, including GLIN. And he had a thesis.
iShares infrastructure.
He had a thesis, but then I just summarized it as, is 2025 the year of ETFs that begin with Q?
Maybe, there's a few.
There's many. Maybe 2025 is the year when something that has a ticker symbol that begins with Q wins.
Well, QQQ is one of the biggest in the world. There's 3 Qs in Invesco's. Yeah.
So, there's something in the water. Scooter.
Solid 12 months anyway for QSML, 36% for 12 months.
It's been a bit of a rebound thanks to falling interest rates across the globe. Scooter for $1,000 is pitching Fairlight Asset Management, which is the global small companies.
Global SMIDs. Yep.
SMIDs.
Don't mind that call.
Yeah. I like it too, to be honest. I probably would have if I had space in my portfolio. So Scooter's pitched that as Fairlight. We have had Nick Cregan, had to really stretch back into the archives for that. Nick Cregan on the show before to talk about
Fairlight. Solid fun too.
Unbelievable. Yeah. Those guys have done seriously impressive stuff. For those of you that don't know, Fairlight and Nick and some of the team there worked with Stephen Arnold, who now runs Aorus, which has also done exceptionally well. Something in the water that they're drinking for sure. So that's $1,000 from Scooter. Finally, Fraser in the community pitched DGSM. No idea what this was. I did know what it was.
Dimensional global smalls. Yeah. So it's like an enhanced index exposure to global smalls. Probably similar to, not similar, but same idea as Invesco.
Yeah.
That you're relying on data and diversifying risk to invest into global smaller companies. Dimensional being a rather significant asset manager and actually financial advice group in the US as well.
Yeah, so
it's an interesting one from Fraser.
Yeah, so we'll put the full portfolio in the community and in the show notes. So if you want the full portfolios, you can go into the show notes. There's also a link to where you can track it in there too.
Gus. Sorry, I mean,
he's lifting the lid. All right, Drew, you've kind of lifted the lid on one of the positions potentially. So why don't we do a bit of I go, you go?
Yeah, let's do it.
As we go down the portfolio, you tell us what you're putting in and why you're putting it in and how much you're putting in.
Keep it succinct.
Keep it succinct. Let's not waste people's time here. You can view the portfolios, like I said, in the show notes. I'll go first because you, for whatever reason, have got 8 positions even though you were allowed 10. So you're just amping it up.
There's no requirement to have all 10, was there?
No.
No, that's good. Yeah,
you could have just picked one if you wanted to.
And I've applied a bit of a concentration or a exposure theory here. So appropriately weight exposure theory. That's therapy. No, we're not doing exposure therapy. Been watching Shrinking at the moment too.
Oh, yeah.
Incredibly funny.
Yeah, it is very good.
So what I've tried to do is, before I give mine, is you've done, and we'll hear about how yours is weighted, but for direct stock positions, I tend to have a smaller weighting as I would to like a satellite ETF or a diversified ETF position. Mm-hmm. For context. Just
for this, yeah. And I would normally do that same thing too. But for this purpose, I've just gone equal weight across all 10 of my positions, just so people don't get too confused. Now, Drew has just discovered
We have the same.
Yeah,
There's overlap.
I put in the code of the fund.
Oh.
You have picked the actual name of it in yours. So before we get to that, you weren't supposed to see that. We have to say the name of our portfolio. Now I have spoken to the powers that be behind the microphone, Monique Pizzica, our podcast manager here, and she has named my portfolio as This Is the Best One. So This Is the Best One starts off with a $1,000 allocation, Drew, to FANG, which you may have heard before, the FANG Plus ETF from Global X. Full disclosure, sponsor of the show. FANG Plus invests in some of the biggest US tech names, companies with pricing power, has performed exceptionally well over the last few years, but I'm not letting that put me off because those mega cap companies, Nvidia, Apple, Facebook, or Meta now, these companies have absolutely monstered cloud computing and continue to do that. They're also basically hoovering up all of the AI and related types of businesses and opportunities. So $1,000 in my equally weighted portfolio goes to FANG.
Yeah, exciting. Just
crossed $1 billion.
Any new ideas or just taking my best ones?
Well, I figured if I took that one first, then you wouldn't be able to use it
next year.
But you kind of
took your other one anyway.
You got stuff in there anyway. So what's your first one?
I got a bit out there, and this is what I'm trying to find here is undervalued pockets of the market and things that might have a good catalyst to run in 2025. This is obviously very short term. Yep. I had two options. I kind of think of this as an asset class or a sector or something, and then the tool of how I get it is less important. But I'm going with the Australian resources sector. And in this case, I'm just thinking an index works easier. So it would be MVR, so VanEck resources only sector exposure, or QRE, the beta shares option.
You have to give us one.
I'll do QRE.
Okay, QRE. So ASX QRE, Drew, is putting how much into this thing because of resources?
20% of my portfolio.
20%?
Yes.
Wow. You really have something to prove to everyone that listens to the show here. You've got to win.
I mean, there's a lot of BHP in there, so big bet on BHP.
Well, this is kind of contrarian.
And that's what you're looking for.
-5%. At the time of recording, -5% is what this portfolio has returned over the past year. So you're hoping there's a bit of a dead cat bounce here.
You could be taught, but essentially you're seeing rumblings of more stimulus in China. So this is almost, it's pretty much a direct play on China. This ETF has 40% in BHP. Another 30% in other iron ore focused companies. So you're playing the idea that China will begin to recover and stimulate their economy in 2025. And what about your next one? This is a bit of a surprise too.
Well, I'm going with GGUS, that's GGUS. And I actually stole this idea from you because you were talking about it and I was like,
yeah, I was just tempting you to do these things. I was
you were just kind of
angling you to the things I didn't want.
Very, very strategic. So I'm picking a fund that is, if contrarian means pick the thing that has fallen that could go back up, I'm actually going double contrarian and picking the thing that has gone up that could go up more.
More and double and leveraging.
Yes. So this ETF, GGUS, uses leverage on top of US shares to get you a return.
S&P 500, MSCI US.
S&P 500.
Yeah.
69.
This is very bold.
69% is what this fund has returned over the year to date at the time of recording. It is...
Didn't take a leverage FANG too?
No, you can do that?
Not yet. Not in Australia.
Well, there is an opportunity here that the US market keeps going higher under Donald Trump as president, and there's a lot of stimulus over there as well, Drew. This is me just riffing on the spot. And basically, this... this ETF just keeps benefiting from all of the US exceptionalism plus a pro-stimulus president in the White House. So there is a bit of a voodoo doll that is kind of creeping in here though, because in the back of my mind, a lot of studies tell us that 1 in every 3 years, the US stock market falls. So this has the potential to reverse on me in a massive way.
And lose more than everything else gains.
Yeah.
Yeah, that's bold.
So even though my portfolio is equally weighted, and you just said you're going 20% in resources, this has the potential to really blow up my portfolio. And this is probably one of the reasons why at Rask, we don't use these types of strategies in our portfolios.
Maybe as a hedge.
But here we go. GGUS for $1,000. Drew, you've got some random combination of letters and soup over there. What does that random gibberish stand for in my spreadsheet?
Again, so my first 3 holdings are going to be diversified funds or ETFs or sector exposures, and my next are going to be direct stocks, and the direct stocks will be smaller weighting. So this one I've done 20% as well. I've suggested, or I've put in 20%, and I like the mid-cap sector in Australia. So those companies that fall outside the top 20, I know you've interviewed, it's actually the PM of this fund in previous weeks.
Hershen.
Yeah. So this is a style neutral, which means it's not growth, not value, and an exposure to mid-cap companies in Australia. So I got a pretty big exposure to resources. I'm essentially cutting out the banks, the industrials, the retailers, and I'm going straight into everything outside that. And I like this because it's tended to underperform in the last few years as CBA and the bigger companies have dominated returns and dominated the index. I see this kind of a diversifier and a little pocket of opportunity.
I like this move. So I think this is
could be replaced with something like X20 as an index, and there's about 10 other X20 Australian equity strategies that you could use instead of this too.
Okay. Like it, mate. That I actually do really like that. If
actively managed,
yeah, actively managed fund. If you haven't already heard the podcast with Dion Hershen, go and check that out. I'm going straight into that kind of mid-cap, small-cap space with RPM Global, a technology company that services the mining industry. We've talked a lot about RPM Global over the years. I've followed it for many years, run by a pretty entrepreneurial CEO in Richard Matthews. I'm allocating in my equal weight portfolio in equally weighted $1,000. So there we go. The company basically is, I would say,
work out what they do.
7 to 8 tenths of the way through its transition to like a fully fledged ASX mid-cap kind of market darling in software. It's now, I think off the top of my head, nearly 100% of the revenue is software and subscription or recurring in nature anyway. It used to be a mining business that would do testing for gas and all that sort of stuff, or advisory. They still do those, not the gas stuff, but they'd still do like advisory and that sort of stuff. But it's more of a technology business now, and you're starting to see the economics of that play out. The company looks expensive on a traditional like price earnings ratio or something like that.
What doesn't? That's
because a big reason for that is that it's in its inflection point now, and it's kind of speeding out the other side with, it'll have better margins and those types of things. So RPM Global, small company, obviously in a traditional portfolio, like Drew said, I would not weight it equally like this potentially. I would have it as a smaller allocation, but for the sake of this portfolio and keeping it simple and good times ahead, I'm sure from RPM Global.
And are we allowed to have overlap? Like if I'm going to take this one in advance, you're going to copy it later on?
Yes.
Yep, you're the one copying me again? Yep. Not the other way.
Interesting. I should have brought this up the list.
So sticking with this story, which is those little pockets of opportunity that, you think as a sector, small caps hasn't done that, global small caps hasn't done that well as a broad sector, and that's because of how diverse the index is. But I'm going with, and I believe it's aired already, your interview, or will air
shortly.
With Chow Ma, who is the manager of Munro's Global Growth Small and mid-cap companies. So similar to Fairlight, which went in the Dizzy Rascals portfolio.
Yep.
This is mid and small cap global companies.
So there were a lot of people. It's interesting that you picked this, I picked this. A lot of people in the community also picked this, but I figured we wouldn't put it in the Dizzy Rascals portfolio because everyone's already picked it for our portfolios as well. So
it's pretty bold. It's up 62% in 1 year.
The thing about this fund though, Drew, off the top of my head at the time of recording, I could be wrong about this. So Munro manages over $5 billion for investors. But this particular strategy, which is the pointiest kind of version of it, it's kind of at, the smaller cap end of the global companies. Casper also picked it in the community, is this one in particular has only got about 50 or 70 million in the strategy. So the actual fund itself is still tiny, which is really important when you're investing. Julie Jones also picked this in the community because what it basically means is that they've got a little bit amount of money so they can be more nimble. So that's definitely
not a bad start, 62%.
Yeah.
66 since inception. But I think, and a lot of the time you'd say, it's overvalued because it's done so well, but this is highly actively managed.
Yep.
So the holdings that have driven returns in the last 12 months don't necessarily have to be the ones that are, and because the FUM still growing, doesn't have to be the same ones that are going to drive returns the next 12 months.
Yeah, so it'd be quite interesting. I don't think it will do 70%, but maybe.
Who knows?
Who knows?
I'll get more benefit out of that if it does.
So just to confirm, I also have that in my equally weighted portfolio. Drew had it under a name, and I only got his list a few minutes ago, so I didn't know that. But I did have it in my portfolio under the complicated fund ticker symbol, which you'll see in Navexa.
GSF0874.
Yep. I will add to my R theme, being RPM Global, which trades under the ticker symbol RUL. People get confused. There is another company with the ticker symbol RPM. I'm not talking about that. RUL is the ticker symbol for the last company. This company that I'm talking about is ResMed with RMD. This was the company that we talked about a little while ago. I think the Dome actually mentioned this. Let's give him some credit here. But when everyone was getting in a tizzy about Ozempic, changing sleep apnea and blah, 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 this company got absolutely slammed. It's one of Australia's best performing companies over the past 20 years. It does sleep apnea machines and masks, and there's a big recurring business as well. They got a cloud business, globally diverse, listed on Australia and the US exchanges. $1,000 goes into ResMed for that long-term tailwind. Even with Ozempic, management from ResMed have continuously repeated that you would probably use both of the products in tandem. The whole idea around the Ozempic threat, by the way, is that if people are using a drug to lose weight, they won't have as much hypertension, or they won't snore as much, they won't miss as much sleep. But with this in particular, I think it goes hand in hand. So ResMed, a world leader in sleep apnea devices and software, goes into the portfolio $1,000. Drew.
Interestingly.
Before you get into these two companies.
I have to say, I also have a holding in ResMed.
Oh, do you?
In my portfolio.
Oh, wow.
But only at 5%, so $500. For exactly the same reason.
Oh, yeah, I just saw that down here.
I've actually got a few friends who have tried or are using CPAP. I'm hoping it's a ResMed once. And it's life-changing.
Okay.
Like there was something like people can stop breathing like 300 times in a night and then wonder why they wake up tired. And these things have just changed their life.
Yep. Obstructive sleep apnea is what they specialize in with the CPAP machines. That you're about to pick two companies, which honorable mention goes to Vinoth in the community for picking what he says are the top momentum stocks. And he mentioned NVIDIA and Tesla, being the robo-taxi of the future, as two companies that rank highly for momentum. So shout out to Vinoth. Now, feel free to take these two companies, Drew, in one after the other.
Yeah, I mean, a little known company called NVIDIA.
Yep, very little.
Makes semiconductor chips worth a couple of trillion. It's had a bit of a slower finish to the year, so I think it's setting itself up well for a strong 2025.
Yep, get the technical analysis out.
It's like any story where all the momentum goes in a certain area, then the expectations get too high, everyone gets bored of it for a while, and then it'll be the most popular thing on Wall Street in 3 months' time. So we know the story for semiconductors, the role of I think 90% of their income now comes from data center sales anyway. So it's a play on the AI theme. And I think it's you'll double it. You've probably got a similar exposure between your leveraged GGAS and your FANG as what I do in having a single position in NVIDIA. So we're both making a bet on it in one way. But I think it's just an incredible global leader that you want in your portfolio. And Tesla, that's full momentum.
So full momentum.
The next president of the United States.
Yeah. Yeah. Elon
at some point. If it's impossible, we haven't done the research to work out whether he can be president or not. But the company just keeps evolving, changing, and you just watch the share price. It's doubled in something like 6 to 8 weeks as we go into Christmas. It could. My expectation or hope would be that it falls before New Year's Eve, and then spends the rest of 2025 rallying strongly.
Because we are recording this.
Yes.
About a week ahead of time when it airs. So we're putting this out. We're not quoting share prices because we're not 100% sure, but we hope that it falls right before New Year's. And from New Year's Day, we are tracking this into 2025. So, I mean, that would be good for you. My next one is more of a recent addition, and I think you did lead me down the garden path on this one too, Drew.
This was a stitch up.
And this is full disclosure, this is not because Global X is a sponsor of the Australian Investors Podcast. I didn't even know we were doing it. Oh, maybe they did know we were doing this, but there's no input from anyone else outside of the community and us. This ETF, OZXX, so OzXX, and the reason that it's XX is because it excludes two very important things. It's excluding financials, which you've kind of alluded to.
Reversing my bet.
And the kind of materials space as well. So
You like the it doesn't depend portfolio.
It doesn't depend. Actually, that's pretty interesting. Maybe both of, yeah. Hey, what was the name of your portfolio?
I thought we were going with it depends.
Okay.
Or
it depends.
everything.
Everything, which is a play on everything eggs.
Yes. Because everything eggs goes on everything.
Oh, true. And this portfolio could do everything.
Yeah. Maybe it's the everything portfolio.
Okay, the everything portfolio, and this one is the best one. That's this one over here. So this OZXX, what does it do? It's an ETF that invests in Australian shares, but it excludes resources and financials. So there's an obvious theme in both Drew and my portfolio, to a limited extent in the Dizzy Rascals community portfolio, in that we're kind of trying to get away from the banks because we're a bit worried that maybe they're not going to grow as fast, even just in 2025 for the purposes of this game. But OZXX, I think from Global X, was an ETF that was brought about from, I could be mistaken, but I think there were some big financial planning groups over in Perth who have a lot of clients that are working in mining.
In BHP
in that
or
sort of
mining
stuff.
companies, yeah.
And they said to Global X, hey, can you guys build us an ETF that excludes mining because all of our clients work in mining and probably own shares in mining companies? Build us an ETF that we can use that excludes that stuff. And now here we are over on the East Coast using this, and happy days. So that goes in for $1,000. Now, I should probably go again because I've got a few more before you do. I'll do the next two in tandem because they're an equal play in different markets.
I've never heard of one of them. Oh,
I am doing...
Oh, okay.
Yeah, Wes Farmers, right? Wes Farmers for $1,000, please.
Owner of Bunnings.
Owner of Bunnings. And the other one is HD, and it doesn't stand for high definition.
Home Depot.
Home Depot.
Yeah. The Bunnings of the US.
The Bunnings of the US. Why am I doing this? Because 2025 is the year of the consumer, Drew. You know, interest rates are down. People are like down in the doldrums. But by the end of 2025, spring's going to roll around. Everyone's going to be like, oh, I can put that in the garden.
Replanting, get the chili plants out.
Their wallets are a bit, loose by then. The credit card bills are back rising. Everyone's spending at Bunnings and Home Depot in the US. So Home Depot for $1,000. Wes Farmers, which also owns a bunch of other junk like Officeworks and that sort of stuff.
Kmart.
Shout out to
Catch of the Day.
Shout out to everyone.
Lithium mines.
Yeah, I mean, it does other stuff, but
This is
predominantly.
Drew Meredith stock pick. Wes Farmers, I'd say.
It's got pricing power. Like Masters came and went. There's a few competitors, but realistically, it's pretty much a monopoly on the DIY of Australia.
That's like me going on the Australian Finance Podcast and suggesting Telstra.
Yeah, true. But this is a really interesting business. Like even during COVID, revenue went up. Obviously, there was rumors of price something or others there. But ultimately, it's a really good business. If you want a semi-decent drill, like for a Ryobi drill, you can only get it from Bunnings, is my understanding. Everyone, it's a tradie, will be like, you go to Total Tools or Sydney Tools or one of these ones. Of course, you get a better product from there, but let's realistically, Wes Farmers, Home Depot, massive play on getting out and about, people. Get in your garden. I'll go one more and then you've got two and then I'll do the final one. So I'll do the next boring one, which is people are getting older, Drew. And that is my thesis for buying the IXJ ETF from iShares, which is global healthcare. Yeah, people with sleep apnea, like you said, snoring. So IXJ goes in the portfolio for $1,000.
I actually like this one myself too.
Yeah,
but I called this last year though, and I don't think that turned out very well.
Oh, let's have a quick look. I didn't actually get the latest data from at the time of recording.
last year. I mean, it's
10% exactly at the time of recording, not including any divvies. But IXJ is an ETF that invests in global healthcare companies, Johnson & Johnson, these types of businesses. Solid business. Solid ETF, sorry, and solid businesses. Interestingly, when I was helping manage my mum's portfolio quite a few years ago, this was the first ETF that I bought for her portfolio alongside IXI, which is the Global Consumer Staples. Probably has Home Depot in that one, but IXJ, people getting old.
I'm still trying to work out the strategy behind your portfolio. It feels like a bit of a ragtag bunch of things that are being called, this is the best.
Isn't that heckling?
This is the best one.
This is the best one. Go for
highly diversified, and then a lot of tech, a lot of consumer, some healthcare.
Future-facing industries, Drew.
I feel like I've got a pretty growth focus, and I'll continue that growth focus to what is probably the most, the member of the Mag 7 that's underperformed the most in 2024. Maybe not the most, but close to. Microsoft has only posted a 17% return in 2024. But I see this as, anyone, like I see something as simple as I cut and paste text from one thing to another on Microsoft, and now it automatically formats the text into the style that I'm writing.
Wow.
I don't even know maybe that's not even AI, but it feels like it's AI. I feel like we're not touching the sides when it comes to AI, and Microsoft with the relationship with ChatGPT and the expansion of this and the further sales, Copilot rolling out, more and more businesses investing and embracing it. I think this could be the standout and the one that gets me over the line this year. MSFT, Microsoft.
Yeah, wow. It's kind of like is AI God?
Yeah.
Like you said, I don't even know if that's AI, but I feel like it's touching me and helping me in the right way. Like you could go into the Microsoft.
Pre-writes my emails for me.
Like, is there...
Dear Owen. Yep.
How's your portfolio going? So, this is the hand of God, basically, if you're in the Microsoft ecosystem. It just gives you a little nudge in the right direction. Don't write that.
And that's without even paying
There's a spelling error.
anything else for it yet.
Don't put that formatting.
All started with spell check. Who knew it would come to here?
Wow.
And this one's a bit of a play.
Yeah, go for it.
This is a stock that I have never been able to purchase or justify purchasing with my own money or
I do own
anyone
shares
else's
in
money.
this one, full disclosure.
But this is one that I just feel like I want to be on the bandwagon of in 2025.
Yeah,
and that's PME, Pro Medicus. I'm sick of seeing it go up and up and up and up and up. I'm sure it'll have some sort of challenge this year now that I'm a owner of it in quotation marks.
Fake dollars, yep.
So Pro Medicus getting a similar holding size to ResMed, 5% or $500.
$500 in the Meredith everything portfolio. Jason Price in the community wrote in and said, I'm thinking of a spread between the GARP ETF, early days, but it seems to be heading in the right direction. Pro Medicus, as they just keep powering, and a few contract renewals may have some favorable increases. And then he mentioned WiseTech. And I said, Jason, it's only 12 months, mate. This is absolutely definitely going to maybe work out pick of these three. And he goes, okay, I'm going with Pro Medicus. If you can still get them for around $265 a share.
$265 a share.
Recommended in the Rask community. It's $7, by the way. I have a feeling there will be some market corrections in 2025, says Jason. It's a bit ominous. In which case, the winner might be whoever loses less. I hope Drew is also getting lots of quote-unquote advice to cloud his judgment. Jason?
I feel like a pretty coherent portfolio.
You've got a strategy. I didn't come into this with any strategy other than to win. My final pick
You're going to have to explain what this one does. I still have no idea.
X-ray fluoroscopy machines.
Okay.
XRF Scientific, we had...
Still don't know.
We had the Dome's underling. So Dome is Luke Larrity, who occasionally appears on the show from Seneca Financial. And then his younger protege, Ben, came on the show not too long ago. He's spoken about this. I've followed this company since 2018, which is XRF Scientific, a very small company. This is not a recommendation for anyone to go and buy it. So XRF Scientific creates machines that allow labs to test samples. So if you're a mining company and you have some sort of drill or discovery, you can crush up the samples, pop it in here, and it gives you a result on the purity and those types of things. And the key thing about this business, it's run by an owner-operator, Vance. It's relatively unknown. It's a little bit cyclical, just a little bit.
Just a little bit.
But it sells the hardware and the consumables, the ongoing, materials that you need, the kind of disposable things that happen. It's kind of like a razor and blade model, but for mining, and it's small, it's niche, it's made a couple acquisitions. Like I said, owner-operator, very plain speaking, dividends.
Up 50% this year.
That's my kind of fear, is that it's gone up.
Yeah.
And by the time that in the next 7 days, who knows? So the key thing with this, similar to all the other small cap companies that I've mentioned. Notice how, Drew, you've picked resources and you've gone heavy into resources. Let's give each other some feedback here. You've gone heavy into resources, which I think is obviously a mistake because I've avoided resources with OZXX.
Specifically avoided resources.
But also, I have two companies that provide services to the resources sector, being XRF and RPM Global.
Which rely on a strong resources sector.
However, they make money regardless of whether commodity prices are up or down. They have more annuity-like income. So it wouldn't matter.
Exploration tends to fall if commodity prices are lower too.
However, these companies are business as usual for mine sites.
Okay.
So you have capital-light businesses that are attached to the mining industry without being in the capital intensive.
And I have companies with operational leverage.
I think the one thing with your portfolio that could save you here is that resources, BHP and that have been pretty disappointing, to be honest.
Yeah. That's a contrarian pick. That's contrarian. The rest is growth.
Yeah. What was the third one?
I'm really surprised by your GGUS FANG combo there, to be honest.
Going heavy?
Yeah, the GGUS.
So I've gone
that was pretty bold.
Super concentrated.
Yeah.
I've gone super concentrated into FANG, then added debt on top of the more concentration.
Which is basically the FANG. Like 40% Mag 7 anyway in GGUS. And you've leveraged that. I mean, it's bold. And there's a definite old aging theme here.
Yeah.
Office Works, Bunnings, ResMed. I mean, not the ResMed's only
Home
for
Depot,
aging demographic.
health.
Yep.
So basically I've gone tech heavy,
Yep.
health, avoided resources, avoided financials.
If there was one thing I'd say to you,
Tell me more.
it would probably be that I think you need to get your position sizing a bit better here. Like if you're going to GGUS, you got to have more than 10% in it. And if you're going to FANG, you got to have more than 10. If you're going to IXJ, you got to have more than 10. You can't have the same in IXJ as you have in XREF.
It's interesting that you would try and give me advice that might blow me up.
Are there any last minute changes you would like to make?
I think maybe just go heavier into XRF.
Yeah.
So the rules of the game are you got to win.
Yeah. All right.
And my only thinking is...
Or not lose. Sometimes it's all about not losing.
Well, obviously when you're building portfolios, but for the purposes of this game, we have a mandate, which is win.
All right.
Let's have a look at our community portfolio though.
Maybe we'll take feedback and we'll have a week after New Year's to make any slight adjustments.
SLT and Milo with CBA and QRI. I mean,
yeah.
Don't know about that.
KK, I'm not sure about either.
I don't know what Kev was talking about, but it has gone up.
Mate, he's already made like 15 bagger on it, so I'm not sure why he's putting it forward.
But I guess the fact is like KKR is one of the world's it is probably the world's leader in private equity. Private markets are growing. They're basically guaranteed to make money because they're a combination between lawyers and investment bankers, and they got a lot of money. So there's that. Mader Group is a very good company from Portfolio Leo YOLO.
I'm just going to, can I short a couple of these stocks before the end of the year?
Vulcan is quite interesting. I mean, there were more, Vulcan was at the specky end of these picks, but trust me on this, Drew, there were way more speculative picks.
We didn't touch them.
Because we're trying to protect the community a little bit from themselves. Like if one of the sensible Sallys in the community comes in and then gets blown out of the water by something else. If I was going to change anything, you know what I would change?
You put more in OzXX.
I would swap one of these things out and I would put Bitcoin in there.
Oh, okay. You got the chance to do it if you like.
I am not going to do that right now. What in your portfolio, you've kind of got like this mishmash of, you may as well have just bought FANG because you've got Nvidia, Tesla, Microsoft.
The best parts of FANG.
You don't like Apple, Google?
No.
Yeah, that's fair.
I'm excited for this.
Yep.
And no rebalancing, just holding it as it is for the entire year. And we'll do a monthly, quarterly update, daily update even.
Yeah, we'll just do daily.
Yep.
It's interesting. Like it's obviously these are not our portfolios. There's no defensive assets. You would put in, like obviously I'm assuming in the Wattle portfolio, same with ours, is that you'd have credit in there. You'd have probably some fixed income, some cash-like things. But overall, we will see what happens. Now, everyone who contributed to the People's Portfolio, if you haven't already got yourself the Value Investor Program from Rask, you can write into us over the break and we'll hook you up with the Value Investor Program, normally $499. It's yours free for contributing to the Dizzy Rascals portfolio. All the best to you. I think you will lose, but that's okay. You know, you can't have winners without losers. You got a dad joke?
I do.
Go for it.
I decided to invest in stocks, beef, chicken, vegetable. One day I hope to be a billionaire.
Oh my gosh. Where'd you get that from?
Reddit.
Geez, you want to unread that one because that's
Billionaire?
Billionaire.
Yeah.
Yeah, not bad, mate. Yeah. Well, you might be with your portfolio. So good dad joke, 3 out of 10, not bad. Come back next week for better dad jokes. But we do have some episodes coming at you, including a couple of Q&As and a bit of fun on the next couple of Saturdays. We've got some amazing interviews coming at you. Chow Ma, Grant Hackett, a bunch of other interviews coming to you. So don't forget to subscribe to the Australian Investors Podcast and keep tabs on our portfolio using the Rask Community. You can get financial planning advice moving into the new year and actually build a proper portfolio that matches your objectives, whether you're in retirement or accumulation. Head to the link in your show notes, which says financial planning. I'm Owen Rask. This is Drew Meredith. We appreciate you taking the time to join us and have a bit of fun with this community activity and portfolio. Remember, it's not financial advice and these are not recommendations. Speak to a licensed and trusted financial planner before you act on any of the information you hear on a Rask podcast. Drew Meredith, as always, thanks for joining me.
It's good to see you.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.